Hi, this is Tom Nunemaker with Capital Discussions. This is my trading update for July 24th, 2014. You're looking at an SPX index 2-day chart, 3-minute bars. So this left half is yesterday, this right half is today. So we were kind of up and down between 1986 and 1991 and a half roughly today, about a 5.5 point range, ending up just up what is that, about less than $1. So basically unchanged for the day. And if you look at a little bit longer term chart, here's our 6-month chart with daily bars. Here's our uptrend line that we've drawn yesterday. You can see obviously we're still well above that, just kind of going sideways. We are trying to test the new highs. You can see the bulls are trying to push higher, but it's still pretty balanced. It's going up a little bit. We have higher highs and higher lows, but if I was going to bet, I would say it's going to continue higher, but it could obviously reverse. But the upward trend is what I'm thinking we're doing at the moment. So if we look at option view, close that. Right now, today, we are up $682. Our short delta of our short puts is minus 11.9. So overall, our position delta is minus 153. Now I did do this. We had this position on, and about an hour ago I tried to close out this extra debit spread. So I sold one and I bought one, and that left us with this 10 by 20 by 10 butterfly. So I took the hedge off. And why did I do that? Well, if we look at our put at the money volatility, 9.2%, if we add 1.5, that puts us up to 10.7. Just to be conservative, if it starts going down, then here's what we have. So in T plus 15 in 15 days, and if you right click, you can see what date that is, August 8th. So, a week, 2 weeks from tomorrow. That's this line. Well, here's our standard deviations. It's at 10.2%, and you can see that right here. 10.2 or 10.7%, sorry. Let me toggle that off. Get to play with my new drawing tool. Here we are at 2 standard deviations, and that is well underneath our tent. So that's even above our downside break even of 1897. Now, that's after taking the hedge off. So you can see even at 1 week, we're still, pretty good. And what that did is it raised up this expiration profit above our upper long strike. So it was 1,300 something. Now it's up. I sold it for $4.15. Actually, here's the account and the trade log. So you can see I sold the spread for $4.15 minus the $3.16 commission. So $412 is what it brought in. And that increased this part of the graph up $412. So if I superimpose what I used to have, let me just put these back on. I'll superimpose that. You can see that with the hedge, you make a little bit more money on the downside. It extends your downside break even, but I have to zoom in a little bit to see this expiration. You can see there's our $412 difference. So if you hold it to expiration, you get a little bit more money on this side. So we've lifted the expiration profit above our long strike right here. So right now we're looking at 1732 if we hold it to expiration, which is a pretty good return. Where's the yields on here? That looks like 5% yield, so it's pretty good. Right now the margin on this account is 21,000 for portfolio margin versus 33,000 right T. So PM is giving us quite a bonus for this actually. All right, so we're pretty flat, really nothing much to do. Let me put these lines back in. Here's, you can see with 5 lines how the time decay goes. So this is every week roughly, every 8 days. Plus 8, plus 15, plus 23, and expiration in a month. So if we can actually get up here, where is that? We can get to our expiration profit if we stay at the same place in a week. So let's see if it does that. That'd be great if it does, and then we can close it and move on to another trade. But that's pretty much it for tomorrow. Let me look at the chart again. It's really hard to call which way it's going to go. We could do a little profit taking, get down 1980, maybe 1970, or we could press higher. It looks like, we've got 3 days of higher highs and higher lows, actually 4 days if you count this. That's an inside bar. This is bullish. It's a little bullish formation. So we could have a little profit taking, or we could keep going, but I don't expect any big moves yet unless there's some news. So that's good for our trade because our long puts are at 1945, which is here. So we have quite a ways to go before we get to our long put. All right, so that's pretty much it. Thanks a lot.